Welcome to Animal Spirits with Michael and Ben. Michael, I have finance brain sometimes where I feel like being involved in the markets means that my emotional triggers and things that I pay attention to are completely market related sometimes.
So your mood is correlated to the Dow?
Not necessarily my mood. Well, sometimes it's opposite. I think there's a lot of ways in which finance has shaped me. Like my wife all the time says, you never show like any enthusiasm or get too high or too low. Or, like you're always just kind of in the middle, right?
I'm the opposite.
But I think being involved in finance has kind of done that to me, where like I don't get too worked up about things because in the markets you try to teach yourself.
I don't think
never get too worked up.
I think this is a personality thing. This is not the market didn't do this to you. You did this to you.
Okay, it could be. That's
because I've been doing this almost as long as you have, and I still am flying when the market when the market is going nuts.
But my point is, the Friday after Thanksgiving, the stock market fell more than 2%, and that's what it took for my dumb finance brain to think, oh, this new variant actually matters.
Right.
And I mean, it happened really quick when the news started to come out, and you
So
started
you take your cues from the virus based on the stock market's reaction, which
I shouldn't,
fair.
which I shouldn't do, but I do because
where else are you
I
supposed
have
to
a dumb finance brain.
Where else are you supposed to get it from? Like, no offense, but like USA Today or Good Morning America. How else?
Basically, Twitter and the stock market is how I figure this stuff out. I don't know. So the S&P was down 2% for the first time since September. Before that, it had only been down 2%. The last time was May. So this has been a very, there's not many bumps in the road.
It's been an extraordinarily calm market. So a 2% down day, which it happens all the time, might have felt worse than it did. It was also Friday going to a long weekend, and it was also the nature of the drop, particularly because you see the companies that were leading on the day. Zoom, Peloton, you're like, oh, here we go again. And the companies that were getting killed, and even like
bizarre.
Clorox. You haven't seen Clorox on the leaderboard for like a year and a half.
You could say, well, it's all algorithms and there's no liquidity and
so
whatever. That doesn't matter. But where are you mentally with this still being here almost 2 years later? Because for me, it's gone from March 2020 was fear, like crippling uncertainty, like what is going to happen, and then finally you get some hope from the vaccine. And now, to me, it's just kind of annoying that it's still here. I've kind of come. Maybe this is. I think how you personally have been impacted by the virus really impacts how you see it.
Totally.
And after I got COVID, I've just come around to this is me thinking through my personal experience. I think everyone's going to get it. I don't know that for sure, but I think if it keeps hanging around like this and morphing and changing. Obviously, you could stay ahead of it with boosters and different vaccines and stuff, but I think eventually pretty much everyone is going to get it. So that's why after I got it, besides being sick and that just being terrible and sucking for a month or whatever it was, I was kind of relieved to have it out of the way and know that I was going to be okay.
Here's what I'm nervous about. If this gets really bad, the variant, if cases start to spike again, if the government tries to do something, some sort of mandate, whatever, I'm nervous that's going to go really.
I don't think.
Really,
I think that
really
ship
poorly.
has sailed.
I think people are done being told what they can and can't do, rightly or wrongly. I really hope it doesn't get to that point for health reasons, for societal reasons.
So we're at the point in Michigan where we're the worst state in the country right now. We have been for a few weeks.
What is that?
Meaning case numbers.
I'm saying, what's that about? Why is it that?
I don't know. Maybe the variant's already here. We're always like, after the waves go through like the Northeast and the South, somehow they get Michigan last. That seems like we've had 3 huge waves. But our hospitals are sending out word that they're full, basically. I've heard stories from family members who went to the ER for a legitimate reason and got turned away because there was no beds left. Our pediatrician sent out an email a couple weeks ago saying, we're basically full from people coming in for appointments in the morning. Like we can't take any more people. Oof. And they have like a 25% positivity rate. But the crazy thing is we've all become kind of numb to it at this point because it's been going on so long.
So Jim Bianco tweeted on Friday, the 10-year treasury yield ends down 16 basis points, most since March 2020. The reason is the same as March, an oh shit moment about COVID.
The 10-year is at 1.4% as we speak.
How high did it get? Was it
1.7 maybe?
1.7?
But
okay, so the market's bouncing a little bit. The 10-year, it's coming off the lows, but wow, that was a big drop. So I'm doing my part to get rid of this virus. What?
interest rates are just never going to rise again, I think. I know we talk about this all the time. What is it going to take? Anyway, go ahead.
So we had Tarek, founder of Kalshi. That's Kalshi. I had a lot of people email me. How do you spell it? Kalshi. And what does Kalshi do? Let me read it right from the horse's mouth.
Well, it's betting markets on binary outcomes of world events. You don't even need to read it. That's
I know, but their tagline, that's true. All right, so you could bet on what you think is going to happen with real world events, which we think has enormous implications for the potential, I don't want to say betting markets, for the investing markets, because if you are going to like try and hedge the election, remember all of that in November? All that shit is never going away. When there was a date coming and people are trying to like jockey and position themselves, well, if this happens, then I think the dollar's going to do this. And then I think because of that, here's what rates are going to do. And then here's what I think, just bet on the event.
Right. Instead of betting, like what are the markets going to do after Brexit? Because remember, everyone thought the markets were going to get crushed after Brexit.
Just bet on Brexit.
You could, yeah. So,
all right. So I put my money where my mouth is, although there's only $100. So, but I do not want to see the Omicron, or whatever we're calling it. I don't want to see the Omicron spread. So what I did was I bet no, Omicron will not make up greater than 1% of U.S. COVID cases by the new year, which...
I love how you think that means that's you doing your part.
I'm trying.
Because if you bet against it.
But so I was late. I was late because I looked at the betting market on like, what day is today? I looked at the betting market on, I don't know, Friday maybe? And yes was 74, no was 29.
So this says, will Omicron make up greater than 1% of U.S. COVID cases by the new year? And the stipulation is it estimated by the CDC to be strictly greater than 1% of total U.S. COVID cases? And this is by January 5th is when this expires. So I think I'm wondering, I have nothing to base this on. Michigan has their crazy case counts. That's got to be in there already. I bet we're probably already at 1% as it is, and we just don't know it.
So you
is
took
that possible?
I said
yes.
You took the other side of me because you're a hater and you're not a patriot like I am. But the market went against me. So I could have got no for 29 cents the other day. What did I pay? 34 cents. So the market is saying that, yes, you idiot, of course.
It's saying, well, right now it's saying there's basically a 70% chance that this variant will be over 1% by the end of the year. In a month, basically.
Who's a contrarian? This guy.
Okay, well, your payout could be higher. But I think this is very cool how you can bet on these kind of things, and I think this is going to grow. And by the time we get to the 2024 election, I'm guessing these markets are going to be massive, especially for that stuff. If people can actually bet on the outcome of the election, who's going to win the Republican primary, who's going to be the president, it's going to be huge.
What are those numbers that like we see on election night? Is that predicted? I don't know what site that is, but you can't.
So now we can follow the graphs for these.
Now we can actually unleash our real inner degens.
Yeah, I mean, my whole thing with the variant in the markets is, I think there's people who are trying to say, like, it's time to worry, and people say, no, it's time to not worry. Like, this is the time for me to say, I don't know. Like, I'm not, until they say definitively, this thing can puncture the vaccine, or it can't, I'm not going to, whatever. I'm not going to make a statement either way. I don't care.
Do you think that this is just algorithms at this point? Probably, right? Because all this happens so fast. Like Peloton spikes.
The interesting thing to me about like why my dumb finance brain reacted to it is the market hasn't reacted to COVID news in a long, long time, right? It hasn't cared about anything. It didn't really care about the Delta variant at all, right?
No, there was selling from the second wave.
Okay, so that the 5% correction was maybe part of that.
But my point is, do you think that any human being saw the Omicron, or however the hell you pronounce it, and said, I'm going to buy Peloton stock?
Right, probably
Of course not. But Peloton spiked on that day. It probably fell since.
Here's what I did last weekend, though, that maybe this is very related, maybe it's not. I bought a new Bowflex for my gym in my basement.
A new Bowflex?
I had a Bowflex. It's probably 7 years old. Those bendy things that they have, they get a little worn out. So I bought it, and I said, you know what?
Nice flex. I got my Bowflex last year, and they're still brand new. You can't even tell that I've been pumping iron.
No, but I don't have the dumbbells like you. I have the whole contraption, like the home, everything in one.
How
like
are your lats? Let me see your lats.
That's what the pull-up bar is for. But this is one of the changes for me is I thought I'd go back to the gym, and now I'm thinking like, I don't think I need to go back to the gym. I don't have the desire to go back to the gym. I've created enough of a home gym where it's
Do you
easier
walk
for me to just work
around
out
with
at home.
like the cutouts here, and like the string in the back?
The big milk jug of water. Yeah.
Are you that guy, or do you just wear a t-shirt?
No, you can't be you can't work out on a Bowflex and be like a power lifter. So I'm not doing any powerlifting like squats and that kind of stuff. So.
Eddie, do you grunt at the gym?
No, I'm not a grunter. Sorry,
any feelings on Jack Dorsey being out of Twitter?
I don't know. It was interesting. I mean, it's interesting how the stock goes up like 11% when he says he's gone, and then they hire someone from internally at Twitter, and that whole gain is wiped away. That's got to be kind of mess with your mind a little bit for both gentlemen. I mean, we've talked about this before, but has there ever been a company that's more culturally relevant that has had worse financial results than Twitter in this new era of new companies in this century?
Hear me now. I'm going to talk about this with Josh Knight on what are your thoughts. So since Twitter went public back in 2013, the stock is up 2%.
Oof.
Over that same time, Ben, the Global X social media ETF is up 210%.
If you would have told someone back then,
2,110 basis points.
Listen, in Twitter, when Twitter went public, you could have said, in this next decade, Twitter is basically going to elect a new president. If you would have said, should I buy Twitter stock? You would have said emphatically yes. But didn't matter.
21,000 basis points, let the record show, versus 2.
So initially, in that first month after it went public, it screamed up to like $70. It's still down 43% from that level right now.
Just a horror show. All right. $1.25 tree, LOL. What are your thoughts? It's amazing that they've never raised their prices. Have they been around? Have they not raised their prices in 20 years?
I think they probably changed the size of their stuff or the quality of their stuff.
Yeah,
I don't know. This was a Rorschach test for people who want to push inflation.
For 35 years, Dollar Tree has managed through inflationary periods to maintain. So basically, they broke the buck, right? They broke the buck. But yeah, I think you're right. The packages were probably getting smaller. I mean, obviously, they're running a business. But if this is your hyperinflation case,
right?
Get the fuck out of here! Come on.
Yes. The funny thing is, they still have huge margins at their business. They make a ton of money still, even on this junk. Have you ever brought your kids to the dollar store? That's like
I went this weekend.
So my kids, they think that's a treat. If we go to the dollar store and be like, you can pick out 3 things here, they think that's like the greatest place on earth. It's all junk unless you get, I don't know, food or
not even close to true.
Or
not even close to true.
You don't think so?
The Dollar Tree that I went to
Sorry, the kids stuff that we get, like the toys.
Yeah, of course,
that stuff's junk and ends up being thrown away the same day.
Yeah, but they have real stuff there.
Yeah, they do have stuff you can use. I agree.
I'm just looking at the margins because you pointed them out, so I just want to take a peek. This looks pretty low. Whatever. I'm sure they make gobs of money. The margins are not the point. No, but it just looks very low.
Okay, no. So here it is. As of January 2021, they had on revenue of $25.5 billion. They had a gross profit of nearly $8 billion.
Where are you looking at?
On their income statement. If you look at their income statement, they have operating revenue of $25.5 billion and gross profit of $7.8 billion.
I'm at their income statement too.
So they have like a 30% margin. That's pretty darn good on a gross basis. A gross margin of 30%, basically.
All right, not bad.
All right.
I'm looking quarterly. Are you at Dollar Tree?
Yes.
All right. All right.
Whatever.
Oh, here's where the inflation has been. I found it. There's this thing. Listen, I like the Wall Street Journal. I like it a lot. I'm a subscriber. There's this thing called WSJ Pro private equity. You ever see this?
No, I did not. Is that a new subscription thing?
It's newish. I've seen it before. Never really paid it much mind, but it says Josh Kushner's Thrive Capital gains more flexibility to invest in crypto, public stocks. They're registering as an RIA. Oh, we're an RIA. This is a story that I'm interested in. I wanted to click in it. So it says our intelligence, your advantage. Sign in and subscribe. So I try to sign in with my username. No. It says subscribe. So all right, I'll hit subscribe. What's going on? Let me see how I read this article. Request information. Ooh, fancy. Request information. All right, I'll request information. I hit that. This takes you to the next piece of the puzzle. Guess how much this costs a month?
A lot.
$192 a month. Who, if you're paying $192 a month, no offense to the Wall Street Journal, you're not getting your news from the Wall Street Journal.
Well, no, that's knowing your audience. That's knowing that private equity people will pay for it. That's
really?
The whole idea.
Don't you think that? No, I think that private equity people have their own sources. They don't need to pay the Wall Street Journal to.
Private equity people are definitely paying for this.
How many subscriptions do you think they have sold? I'm gonna guess. I'm gonna guess 64.
I've never heard of it. So, by the way, have you ever subscribed to a local newspaper before? You have to pay now, to read it online.
We've got Newsday,
so
I don't think I subscribe.
So I actually did the local Detroit Free Press. I used to live over there. I still like to follow that, and I subscribe and get the couple free months or whatever, and then you pay like $1, and then you have to. So I did that so I could read some Michigan football stories. Which, shout out to Michigan finally beating Ohio State. Thank you very much. I think I almost cried on Saturday when it happened finally.
Were you drinking beers?
No, I wasn't actually. To cancel a newspaper for a local paper, you have to call an actual number and talk to someone. You cannot cancel it online. How big of a racket is that? It's
local. I mean, listen, they're struggling.
All right.
Speaking of, why are you canceling your local newspaper? You really aren't a patriot.
I'm not going to read it anymore.
All right. Shame on you. Ben, I rugged myself again, but not really. Not really. So for the Constitution DAO, they didn't buy the Constitution.
I meant to ask you about this.
They were going to give people money back via the People Token, which I was super stoked to get in on. But, and I'm actually I'm a little bit bitter about this. There was a redeem button. So I hit redeem, and all of a sudden I see my ETH come back. I'm like, no, I thought I was getting People Token. What the hell? So I'm like, no, I want my People Token. You had to scroll down further. I can't remember the exact thing, but it was not intuitive at all.
So wait, how much was the People Token up? Because I saw it going crazy, right?
So I invested $500. It would be worth 15,000. And I have to be honest, that stings.
Oh, that's perfect.
That really stings. But I'm not the only one.
You had to pay gas fees to get it back too, right?
I had to pay gas fees.
So of your $500 that you put into this thing, how much did you pay in gas fees? $400?
No. I think I put in $500, and I ended up probably spending $80 on gas fees on the way in.
By the way, this is why crypto bros complain so much about inflation. They complain that the Dollar Tree is raising their prices from $1 to $1.25, but will gladly pay $300 in gas fees on a $400 purchase.
Yeah. This one stings because my intention was to get the token, and it was not at all intuitive. I hit redeem. It should have said redeem to ETH or redeem to people.
Yeah, that's a way better story though.
15 grand. Yikes. Anyhow. Somebody tweeted, inspired by the success of Constitution DAO, Swartz DAO, which sounds Swartz. That sounds like a knockoff of Spaceballs or something. Swartz DAO is a decentralized organization with the goal of acquiring paywalled academic journals and publishing all of their content under open access licenses. Ta-da! How cool is that?
I mean, that sounds like a lawsuit to me.
Why? They're buying it.
Oh, they want to buy all these journals and open them up?
With the goal of acquiring paywalled academic journals.
Okay. Oh, so they're going to buy them. Okay.
So I think people are going to contribute to this DAO. They're going to buy these academic shit and just open it up.
Oh, I like it because every once in a while I'll do a financial analyst journal one or something. And you click on it and you can't get on it.
You're what the $100 for an article? I just want to read one article.
Right.
So boom. What do you think of that?
That's a good DAO. I like it.
Will you support this DAO?
I mean, I'm not going to.
You don't even support your local newspaper. You're not supporting this DAO. Get out of here.
I do too. I subscribe for 6 months, then I cancel it.
You're a horrible person. It's still earnings season.
You're still going? I thought you were done for a while.
I'm still going. Listen, I promises made, promises kept. I told them we were going to do this. I'm doing it. Gap. Let's talk about the Gap first. Do you remember? Well, I remember when I first found out that the Gap owned Banana Republic, Old Navy. Did they ever own J. Crew?
No.
Or was that separate? That was separate?
Separately.
Big J. Crew guy. We haven't spoken about J. Crew in like a year or two. Still shopping there? Are they still around?
I believe this sweater is a J. Crew sweater.
Nailed it. But
Yeah,
I remember this is straight Ram Capital. Not, I don't think he's J. Crew. Probably Haynes. Anyway, I remember when I first found out that the Gap owned these stores, my head exploded because I didn't have any concept of like businesses. Forget about public, but like just business in general. For some reason, that is like a flashbulb moment with me because I was in the mall and I remember like young Michael was like the whoa Keanu moment, you know?
So there's this book called Wild Company, The Untold Story of Banana Republic. And it's by the husband and wife. I think I mentioned it on the show a couple years ago. Husband and wife who founded Banana Republic. It's a really cool business startup story. And they got to the point where they needed to kind of sell out and Gap bought them way back in the day. But they actually, the reason it's called Banana Republic, they actually would buy these threads that came from like Africa and Italy that looked like you were going on a jungle safari.
Interesting. So, all right, let's start with Gap. Big, like sprayed all over the conference call was the fact that there's port delays. For example, Q3 2021 financial highlights. Here's the first thing it says. Port delays and factory closures, especially in Vietnam, materially impacted Q3 performance and fiscal year 21 outlook, despite strong demand for our brands, which is hilarious. It's like, listen, people really want Gap, but
How long do you think after the supply chain crisis is over, these companies will still be using that as an excuse? Right? They can get a couple more quarters out of it at least.
So, yes, for sure. They said that they estimated 500. So gross margin hit approximately $100 million in air freight costs. Inventory, 11% decline. Sales estimated $550 to $650 million lost due to inventory constraints. Guess what? Market did not care about excuses. The stock was down 24%
Have
after
you
that
shopped
day.
at the Gap in the last few years?
I get a lot of my clothes from the Gap because my wife gets me my clothes from there.
Okay.
I'm a simple man. I just like their plain tees.
That most of their clothes though fell off a cliff 5 years ago.
In terms of quality, I wouldn't even, honestly, I don't think I would notice a difference.
Fashion wise, yes. If you're
Oh,
getting
fashion wise.
yeah, they don't have, yeah. No more Gap shopping for me. Sorry.
Okay.
I'm an elitist.
Clearly, so the Gap fell 24% that day. Man, it's still falling. The stock was $37. It was on a great run. The stock was $37 in May. It's now 16.
Jeez.
How hard is picking stocks? I feel like people only talk about the winners. Here's another one. Nordstrom, same type of thing. And actually, the stock looks a little bit different. Nordstrom fell 29%. So Nordstrom had a Black Monday. I don't know if this was on Monday. I don't think it was. Nordstrom had a Black Monday after they reported. Same deal as Gap. Stock is still falling. You know what's not falling? Very different story. I don't know exactly why. Is Dick's. And I remember talking about Dick's because when Dick's was above its 2019 high, this was fairly early on, I said, you're telling me that Dick's is in better financial shape now than it was pre-pandemic? You're telling me the business is doing better now than it was before? Yes.
So the
answer is yes.
On your stock picking thing, the cool smart thing to say if you're a stock picker is it's not a stock market, it's a market of stocks. It's a stock market because if you look at the consumer discretionary ETF, XLY, it's up 30% this year. You want to know why?
Amazon. It's all Amazon.
21% is Amazon.
Yeah.
19% is Tesla. 10% is Home Depot.
Home Depot. Yeah.
All these other little stocks at Gap and Nordstrom and all these ones getting killed do not matter.
Do not matter.
If you're so market cap weighted, the market of stocks doesn't matter. The biggest stocks are the only thing that matters. It's the
cap
market
for the win. Yeah.
Yes.
So, all right. Dick's, it was the strongest Q3 in company history. Again, I don't know how they didn't have any supply issues, but they didn't. Strongest Q3 in company history. Revenue up 14%. Same-store sales up 12%. E-commerce sales was 13% in 2019. It's now 19% today. We'll share some of the charts. I mean, the financial performance of this company is on fire. The omni-channel on fire. I mean,
you ever buy your black Nike hats from Dick's?
They're crushing it.
How many of those do you have?
A lot.
Okay.
Well,
I
bought
you one once as a present, and you didn't like the fit.
Oh, really?
Right? You don't remember that?
Vaguely. I probably have like 4 of these.
Okay.
But the ones that I really like had like the mesh here. They don't make them anymore. Can't find him.
Okay.
Actually, let me see if they. That's a good reminder because that's the hat that I like. It was like a Nike golf hat. Come on, damn it! I don't make them anymore. That's a shame. Anyway, Dix is on fire. Zoom. So we were joking, or I was joking with Jeff Mackey. I think you and I were talking about this. Zoom was another one of those stocks down 50% going into earnings. All the bad news is in the name, right? Can't LOL. The stock got freaking annihilated. Oh, this is interesting on the earnings call. So the stock got creamed after I forget what it fell. 15% the next day. The stock was down. How much is this stock down from its high? It peaked at ExxonMobil and now it's at Dick's Sporting Goods.
That's another thing. Like you can see the drawdowns, but if you look at what some of these market caps used to be, like Peloton went from almost a $50 billion market cap to 8 now or something like that. Like that's the crazy thing to me is the market cap.
How about Robinhood?
Carnage.
Robinhood's like at 20 billion.
All-time low, correct?
I'm not kidding. I think the valuation's becoming very attractive at Robinhood. Even though it's hard to catch a bottom.
Do you think this is at all saying that like the day trading craziness of what's going on is abating a little?
That's exactly what it's saying. But still, 20 billion I think is a fair price.
Okay, someone asked me
Vanguard should buy Robinhood.
There you go. You talk about Zoom getting killed. Someone asked us, this replied to the show last week, said, hey, I got destroyed in Teladoc. I got greedy after winning big on the first bubble. Can you or Michael give any insights onto what indications trigger your sell instincts? Or am I just a Neanderthal for being in risky stocks like TDOC and not watching my account like a hawk? I think there's two ways to think about this if you're investing in growth stocks. If you're going to hold on to these stocks, you're going to get killed occasionally.
Correct. Have to.
You cannot sidestep that. You're going to get crushed.
Yep.
Otherwise, price is the only indicator there is, right? For something like this, if you want to use technicals to get out, if you have some sort of trailing whatever, moving average, trailing, whatever it is, other than that, I don't know what else you can do because looking at the fundamentals of these things versus the stock price, people are pulling forward so much stock price now of what the future could be that it's hard to mesh up those fundamentals with the current price at all.
I think if you're investing in growth stocks, hyper growth stocks trading at ridiculous valuations, you need to have some sort of risk management, my opinion. Because your risk management is either I will never, ever, ever sell, which you're probably fooling yourself because guess what? Most stocks are not Amazon. Most stocks are not Tesla. Most stocks that fall 70% empirically never come back. That agony and the ecstasy piece that we always talk about. So if you're going to invest, I don't care if it's a moving average, a trailing stop, a price point, whatever, like I think you need to have, I think most people should manage risk with growth stocks. But getting back to Zoom, there's a few questions about the metaverse I thought was interesting. Somebody asked, this is the first question, or I think it was the first question. I'm wondering, as you think about the over 400 million business phone users that are on legacy technology, how do you anticipate capitalizing that opportunity? Whoa, 400 million business phones in this market, in this economy? 400 million business phones?
So what do you think Zoom users are? Did they say?
How do they categorize them?
I'm saying like what percentage of that are Zoom users? Now, it's got to be a large percentage at this point.
So I don't think Zoom is that big. So their quarter over quarter revenue was only up 3%. Year over year, it's still up huge, but still that's not great. So they break down their customer base by more than 10 employees or less. Customers with over 10 employees grew by just 1.4%. I'm sorry, you're selling at 30 times sales. This isn't going to cut it. You're going to get bushwhacked. And that's exactly what happened. But at least in the case of Zoom, they $395 million in operating cash flow. They've got $5 billion on the balance sheet. Unlike Peloton, I don't know what their cash position is. Actually, I do. It's not great. They have to raise money.
So what are you saying? Zoom should pay a dividend now?
I'm saying like Zoom, okay. I think Zoom is going to be fine. I mean, easy for me to say. I don't own the stock, but anyway, that's what we got for great quarter guys. And actually, not a great quarter guys. That's from the Quarter app. It's not from it's from us, but go to the Quarter app if you haven't downloaded it already. QUARTR Finance is a Quarter Finance, Quarter Invest. I don't know, it's something like that.
All right, so we talked about Robinhood, maybe people slowing down a little. Apparently, they're not with Tesla. So this is from the FT. They said the nominal trading value of Tesla options has averaged $241 billion a day in recent weeks. That's according to Goldman Sachs. That compares with $138 billion for Amazon and $112 billion for the rest of the S&P combined. So basically, all the options in the S&P 500 stocks are on Tesla and Amazon.
Yep.
This is wild. What's the circular reasoning here behind are the options moving Tesla, or is Tesla moving so much, getting people to bet in the options, and then like how much of that just feeds on itself?
Don't know. I mean, Corey and Hofstein and people like that spend a lot of time on this, on how much is the tail wagging the dog of the options market.
But it's funny to me that people think that like people buying index funds are going to impact the market. I would think this options type of activity has a way bigger impact on individual names than being included in the S&P 500 now, the Russell 2000 or whatever.
For sure.
All right, here is from Reuters. This is a revision from Morgan Stanley. This is a few days before we had the variant hit, so this may be in jeopardy. Incorporating the wealth of data today, including GDP revisions to Q3 21, more robust spending, strong inventory, strong durable goods orders, and upside in new home sales, we significantly raised our Q4 GDP tracking from 3% to 8.7%. And if I'm not mistaken, that's real.
Huge. That's
real. That's after inflation. So with inflation, we're talking, I don't know, 14% nominal GDP growth annualized for the quarter.
Let's bet on that. I'm taking the other side right now. No
You're
way.
saying so because of the variant, or just because you think that's too overboard?
14% nominal GDP growth? I don't think so.
Annualized.
No, I understand, but still. My
wife is 5% of that with her holiday shopping so far. She got duped. Did they not dupe everyone into saying buy all your stuff early because of the supply crisis? We've had no problem getting anything for the last 2 months. Have you?
I don't know. No, we haven't. We've got the boys get 8 presents each, and we're already on night 3.
You see, that's the beauty of Hanukkah. You have a set cap on your presents, right?
Oh, I never thought about it that way.
We don't have that.
Christmas
you have
is
rules based. You have like a portfolio rules for your presents for Hanukkah.
Yeah, you get you get 7 whatever. You get 7 like trinkets, and you get 1 big gift.
I complained about my trees to you a few months ago. I have another tree issue. We went to go get a Christmas tree last week.
As you know, I'm a big tree guy, so go ahead.
We went to get a Christmas tree last week, and it's one of these ones where you cut it down yourself.
Oak,
and
cherry.
We go in to cut the Christmas tree down, and all the ones in the field, we walk like for miles and miles. There's
hold
trees.
on. First of all, I have no idea what you're talking about. You
go to a Christmas tree farm. You can cut it down yourself.
Oh, no kidding. With what? A chainsaw?
They give you a saw that you can do yourself.
A manual saw.
Yes, it sounds way better in theory than in practice. So we get out there.
Sounds awful.
It was, frankly. We're walking over. The kids can't decide on which tree we should get. And all the trees have like 3 more years to grow until they're tall enough to get a big one like we want. So the problem is they had cut down all the big ones and already had them ready to go at the front. So we didn't have to cut. So we walked all the way back and got one that looked really nice. We bring it back, and they put it in the little machine that shakes all the needles off, you know? Like, all right, ready to go. I strap it on my car with like around 8 times with rope, like I know what I'm doing, you know?
Right.
Luckily, it doesn't move. Get back to the house, and we're putting it up, and pine needles are going everywhere. And the guy's like, well, you got to put water in the first half hour, you get it back. Like, otherwise, you know, it's going to be dry.
Wait, I don't know anything about this. What does the base of the tree sit on?
You know, the tree stand, this big green thing, and you put some screws into it so it holds it up. And we got a bit, I mean, we're talking to the top of our 9-foot ceilings. The star is touching. I had to trim someone so it would fit. It was huge. Every time my dog would walk under it, one of the kids would brush past it, the needles are falling off. And this is a huge tree. This is like a 9-foot tree.
Is that unusual? Like,
yes, they should not, especially if you're water. We're like, okay, maybe it's just gonna be water. They gave us a bad tree. It died, basically. All the needles fell off.
You got a lemon.
Yes, we had a lemon of a
so
tree.
So now what?
I spent $100 on it. Do I go back and ask for a refund? We threw it in the backyard. Now my wife is gonna get a fake tree. This is my nightmare. I love real trees, and now we're a fake tree family. I blame the Christmas tree farm for selling us a lemon.
Interesting.
Anyway, all right.
No, but whoa. Does Christmas trees have anything to do with lumber? Like, what were the prices?
That's probably normal. I did hear people say you got to get your Christmas tree early because they might not have enough. But I think that's for places, if you're like in New York City and you're buying one because there's no farms, they're like, we have Christmas tree farms all over the place. I don't think it's a problem for us to get one.
All right, so Elizabeth Warren got ratioed. She tweeted, wondering why your Thanksgiving groceries cost more this year? It's because greedy corporations are charging Americans extra just to keep their stock prices high. This is outrageous.
I saw her getting ratioed. Hot take. I agree with her.
Oh.
I kind of agree with her. Listen, there's a lot of stuff Elizabeth Warren says. She wanted to get rid of Powell, Like, give me a break. She wanted to like get rid of
That
buybacks.
you will not stand for that.
Yes, I will
That's
not
your
stand
boy.
for Jerome Powell slander.
But you're with her on this?
She's got a lot of take. Okay, look at this next chart. Look at the S&P 500 profit margins. And then look at the next chart here. Consumer discretionary and consumer staple profit margins. These things are at all-time highs. If they're really having a problem with inflation, why are their profit margins at all-time highs? I agree with her. They're raising prices to keep their margins high, and they're passing on higher prices to consumers. So they're not only experiencing a little inflation, their profit margins have gone up for consumer staple, consumer discretionary companies.
What if
in the S&P? She is right.
That's not
this is greedy corporations.
What if she tweeted? What if she brought data to her tweets like you did?
People don't care about data, though.
That's true.
That's the problem. People just care about emotion on Twitter. All right, there was a tweet from Mike Simonson, who is a real estate expert, and he showed the inventory of homes for sale in the U.S. And you can see over time, every year, it's seasonal. It spikes, it goes down, it spikes, it goes down, right? You get more inventory in the summer, and then it sort of abates, and you should expect to see inventory rise when you get away from the summer, right? Inventory rise in the winter because not as many people are buying homes. Hasn't really happened yet. And he's saying this is kind of odd. We're not seeing this seasonality hit like we did before. Connor Sen from Bloomberg gave a hot take here that said the simplest read of the housing market data right now is that home prices are still too low. Here, this is I don't want to open up this can of worms again, but he says
next topic.
Inventory is historically low and may set an all-time low in early 2022.
Okay.
Price cut percentages are below normal. Incomes are growing rapidly.
What does that have to do with prices, though?
Like
it's a supply thing.
That's so he's saying. And he's also saying mortgage rates are. He's saying if we don't have inventory come back on board or mortgage rates go way up, home prices are going to continue to rise and are probably too low based on those factors. Okay. And I tend to agree with him that if we don't have mortgage rates scream higher, and I don't see what's going to cause inventory to all of a sudden flood the market, you're probably in a situation where home prices are going to continue to get away from people that are waiting.
Put your money where your mouth is.
Oh, this could be another Kelshi bet we could make.
Because I will take the other side of you right now. Is there a real estate section?
We're gonna have to talk to them.
All right.
Okay. What would that look like?
Will Case-Shiller, right? That's the home price index.
Mm-hmm.
Is it a 20-city index?
Yeah, or there's a national one.
What do you think it's going to be in the next 6 months? Cumulative.
So Connor said bet on
no. What do you say?
monthly.
What do you say, sir?
I'm saying in the next 18 months, housing prices will not fall.
18 months.
18, 24. Give me a number. 36. Housing prices are not going down.
I'm not making a 36-month bet. That's so lame. All right.
Okay.
Whatever.
12 months. Over the next 12 months, housing prices will not fall in the United States.
Dude, you're like saying that home prices are going to keep going up, and then you're like, home prices will not drop. Well, which is it? Are they going up a lot or are they not dropping? Come on.
That means if they don't drop, they're still going up, correct? Do the math.
No, I'm not doing the math.
Come on, Zach Galifianakis.
This is ridiculous.
If they don't drop, they're still rising.
Prices are going to keep rising a lot, I say, and then I will bet they won't fall.
The next 12 months, U.S. housing prices are up at least 7%. Over the next 12 months.
10, and you got to bet.
8.5. Split the difference.
All right, let's talk about inflation in the metaverse. All right, this is an actual.
Do we have to do this?
Yeah, I have to read this. I have to read this. Here's a quote from the Wall Street Journal. Investors' interest in virtual real estate got a boost last month after Facebook renamed itself Meta Platforms Inc. and said it would focus on online worlds commonly called the Metaverse. That interest reached a new peak on Tuesday when Republic Realm, a firm that develops real estate in the Metaverse, said it paid $4.3 million for land in the world's sandbox, the biggest virtual real estate sale publicized to date, according to the company and to date from the website nonfungible.com, which tracks digital land sales. Let me ask you this, end quote. Let me ask you this, Ben. When is Zillow going to buy nonfungible.com? What's the Zestimate for some of these digital real estate?
My eyes just rolled in the back of the head. The problem is that real estate is probably going to worth like $2 billion in like 17 months. And it's going to look smart. But
so, I don't know who said this. Chris Dixon or somebody, all big things are looking like a toy. I'm sorry. I read the wrong quote. Here's the actual quote that I wanted to read that's going to make your eyebrows go to the back of your brain. A landlord said, and then we charge rent. The company employs an asset manager to deal with tenants' complaints and change requests. Its developments include a mall, which it leases to retailers selling fashion for avatars, and a master planned community of around 100 villas on private islands that is sold to individuals. Tokens.com, which is publicly traded, is currently developing an 18-story skyscraper in Decentraland that it hopes to lease to lawyers or cryptocurrency exchanges.
Why do you think they stopped it at 18?
Which can use the building for events.
Building codes for that?
There must be codes in the metaverse. I don't know. By the way,
I'm the old man yelling at the cloud right now.
Me too, but this is going to be huge, right? It's going to be huge.
I just started reading Ready Player 2, the follow-up to Ready Player 1, and it's all about, again, living in the metaverse and like plugging in this thing to your brain that you plug on the headset and it connects to your brain, and everything that you're experiencing in this Ready Player 2 metaverse, you can feel. Like if you eat something, you can actually taste it. It like messes with your taste buds, basically. I'm sorry, that's just a world that I don't want. Call me an old man, get off my lawn kind of thing. This stuff is coming. This is just a world that I think I would rather tell people, get outside and get some sunlight.
But how about this?
That's all I say. Get outside and go for a jog or bike ride. Okay, you can do both.
Stop. Why would you plant a flag when you don't even know what you're talking about? Like, let's just give a time and say, like, you don't have to decide right now before there even is a metaverse. Did you ever see the Bruce Willis movie called like Imposters or something? Where everyone was plugged into their metaverse, but Bruce Willis refused to do it. Like, you would plug in your house, and your like robot person of you would be living in the world. Never heard of this.
What is it called? Is it Imposter? I can't remember what the name is. But Bruce Willis was anti, and so the idea was you can never get hurt if you just sit in your home with your headset on and have your avatar be in the real world for you. And Bruce Willis was anti and wouldn't do it. I'm Bruce Willis in this scenario.
I Googled Bruce Willis metaverse movie. It's called Surrogates.
Surrogates, that's it. Yes. So your surrogate lives the world for you, and you have your headset on, and you can never get hurt, technically. But Bruce Willis said, screw it, I'm going to live in the real world and go against it.
I like that. Not
a great movie, but not a bad one.
All right, where are we going next?
Kind of like a poor man's iRobot.
Oh, we were talking about Waystar Royco's market cap.
Yes, I think I tried to figure out what the drawdown is. So,
right.
Jamie Powell at the FT figured this out, and I must have missed this. So this is what's the guy's name? Adrian Brody's character. I don't think there's too many spoiler alerts here. People say that we do spoilers too much for Succession, but I don't think we do.
By the way, I have not seen the most recent episode, so no spoilers.
Okay, well, I'm not going to spoil anything. So this says that Adrian Brody's character says he lost $350 million or 10% on his 4% position. Backing that out, that's like an $80 billion company. And they also said Roman Roy on the recent Retired Janitors of Idaho episode said we're talking about an $85 billion baby here. So that they've basically said, and I must have missed it. Here's my hot take on the new season of Succession without getting any spoilers. I loved season 1 and 2. Remember before the season started, I said I rewatched season 1 and 2, and I think it's got top 5 potential. I loved season 1 and 2. I like season 3. I think I'm going to need a bombshell in the last 3 episodes to bring me to love, because
that's fair.
You haven't seen the last episode yet. They're doing everything in their power to make you hate these characters. Like you're never supposed to like them because they're rich. But
the scene 2 episodes ago where Logan forces Shiv to get in the picture with that dirtbag politician, who, by the way, was amazing in Weeds. I love that guy.
Yes,
like that was the one. That was the episode where they're like doing picking the president. Like that was like whole. I mean, we know these people are bad. Episode. Like these people are evil.
Here's my thing though. So Entourage. Did you ever watch Entourage?
Yes.
The first few seasons are amazing and hilarious. By the end of the show, you didn't like any of the characters, but there also was a bad plot. So you can't have unlikable characters and a bad plot. If you're gonna have unlikable characters like on Breaking Bad, you need to have an amazing plot, right? So my problem is this season they're making all the characters even more unlikable, but they're not moving forward the plot at all. So I'm still rolling with Succession. I like it, but if I'm gonna love it, I'm gonna need some plot bombshell in the last 3 episodes.
While
That's what
we're
I'm saying.
On this topic, you know what's for me has gone very far south very quickly, and I'm not happy about it. Yellowstone.
Oh really? I'm still in.
I mean,
the thing is that show is that show is so over the top that like I'm along for the ride.
I understand, but nothing's happening.
I don't know. I love Rip so much. He could do anything, and I'd be on board.
I know, but no, I agree. Rip is great, but just nothing's happening. I'm bored. But conversely, you know what's just keeps getting better? Is it 20th season? Curb keeps getting better.
Yes, it does. Yes.
Did we
He
talk
set
about
a very high bar and he keeps staying high.
Did we talk about the two-tone shirt, the blue and gray?
Yeah. Vince Vaughn is finally rounding into a good character for me too. All right, one thing on movies here before we get to some recommendations. No Time to Die is a new James Bond movie. It says it eclipsed $730 million in global ticket sales.
Not a great movie. Not a great movie.
Okay, I didn't see it. I thought the last one was just okay too, so I don't know. Maybe I'll rent it when it comes out. It says it's the highest grossing film since COVID, so since 2019. However, it cost more than $250 million to produce, $100 million to promote, tens of millions more to postpone it. They're basically saying it needs to make $900 just to break even.
Yeah.
This is is inflation killing the movie business?
I did my part. I went to the theater. You didn't go. Is inflation killing the movie theater business?
I mean, that's where you're worried. $40 for
that's where you're worried about inflation, the movie theater business, Ben.
Yeah, tongue in cheek. Sorry.
Did you see the Squid Game thing? This guy, Mr. Beast, YouTube sensation, recreated the actual Squid Game contest. Did you see this?
Yeah, he got 100 million views or something.
Let's see what's up to now. I didn't watch the whole thing. I watched the first few minutes. I was like, oh, that's cute. I get it. 125 million views. Good Lord.
Okay, people keep saying this is a positive for the creator economy. This guy's not a creator. He recreated something. It's the recreator economy.
Well, he's also
I'm joking. I'm just kidding.
No, I understand, but he's also I don't want to say the Jim Cramer. That's a weird analogy. He's the top of the top of the top of the top of the top.
Yes, this guy has figured out. He's figured out YouTube.
Yeah, he's not a random.
No. Yes, I know. There was a good story in Bloomberg on him 6 or 8 months ago, and he's figured out YouTube basically.